Hello everyone, this is Marshall Gittler speaking. I'm going to discuss the main issues facing the FX market in the coming week beginning the 25th of December. Well, as you can imagine, Christmas week usually isn't that active. Tokyo and Southeast Asia are the only major centers open on Monday, and much of Europe, as well as Australia and New Zealand, are closed on Tuesday. Plus, a lot of people take time off the rest of the week, so dealing rooms are thinly staffed even when they're open. And almost no central bankers are making speeches, much less holding meetings. Moreover, clients aren't very active either. Hedge fund traders have long since closed their books to protect their bonuses for the year. Some finish up as early as November if they've made money, as have real money investors. Really, nobody wants to get involved on either side of the market. Now, because of that, you might think that the market isn't likely to be very volatile next week. And you would have been correct in 2011, 2012, 2013, and 2015, when volatility was much lower than normal. Especially in 2012, the last week of the year was the least volatile week of the whole year. However, you would have been quite wrong in 2010, 2014, and 2016, when volatility was higher than average during this week. Particularly in 2014, the last week of the year, last week was the most volatile week of the entire year. Now, the point is that since there are far fewer market participants than normal during the last week, so long as nothing happens, there's little reason for rates to move. But on the other hand, if something does happen, and all of a sudden a number of people want to buy or sell, there are far fewer people around who are willing to take the opposite side of the trade. In that case, things can get wild. That's why the week isn't the week of the lowest average volatility in the year. That honor belongs to a week in August, again, when many people are on vacation. On the other hand, the last week of the year is the week with the widest range in ranking. Since 2010, it's the only week that has been both the most volatile week of the year and the least volatile week. As for what might cause some volatility this week, the first point is one I mention every week, whether Special Counsel Robert Mueller's probe will finally announce some major development, or, on the other hand, whether the opposite will happen, whether Trump will try to fire Mueller or otherwise abort the investigation. Christmas Eve might be a good night to do something like that. Remember, Nixon pulled a similar stunt on a Saturday night. I've been talking a lot about the cross-currency basis swap recently and how it's likely to drive demand for dollars into the end of the year. Well, apparently a lot of that demand has been filled by now, as the basis has contracted significantly. So I don't think that will be a major issue during the week. Aside from that, believe it or not, there are a few indicators out during the week, mostly in the US and Japan. There are just a few indicators out from the US, the Richmond Fed Manufacturing Index and the Dallas Fed National Activity Index on Tuesday, the Conference Board Consumer Confidence and Pending Home Sales on Wednesday, and the Advanced Trade Goods Balance on Thursday. I think this trade data, the latter indicator, is likely to be the most important. It's not so great, although it does show the trade deficit narrowing a bit. The October figure was the widest in 2 years, so narrowing a bit from that isn't really saying much. U.S. imports rose and U.S. exports fell. So the relatively wide deficit forecast for November, even though it's a bit narrower than October, suggests that these negative trends may be continuing, which I think would be bad for the dollar. Now, Japan sees the usual slew of end-month indicators, the main one of which is the inflation data. It's expected to show a modest increase in inflation, but I doubt if anyone will really take that seriously. At its recent meeting, the Bank of Japan noted the recent decline in inflation expectations. Until inflation expectations start to move up, no one will really care that much about a 10 basis point increase in the actual inflation rate. We may get more clarity on Tuesday morning in Japan when Bank of Japan Governor Kuroda speaks. That's the only central banker speech scheduled for the week. And speaking of inflation, the major item for the EU will be the German inflation data on Friday. German inflation is forecast to accelerate on a month-on-month basis, but to slow notably on a year-on-year comparison because there was an even larger rise a year earlier. That could be bad for the euro, if in fact anyone's still trading by Friday afternoon in Europe. So net-net, I don't expect much movement in the currencies this week. Euro-dollar may rally a bit on the US trade data, but lose it on the German inflation data. Not much movement is likely, but a lot of movement is possible if something major happens. This is Marshall Gittler bringing you the outlook for the week beginning the 25th of December. I wish all of you the best for this holiday season and good luck with your trading.